Coming up on Your Money and Your Life, how homeowners and renters can take advantage of a rate cut, decoding power bills to save more on electricity, your best money-saving hacks to cut everyday costs. Plus, in Kochie's Budget Challenge, we help a mum get to her son's destination wedding. G'day and welcome to Your Money and Your Life, the show that's all about saving, spending, investing and managing your money. My goal is to help you get on top of your finances and live a better life. Today we're kicking off with Kochie's Budget Challenge. Every week, with the help of the team at Compare the Market, we dive into real families' bills and hopefully save them heaps. Let's start with the wonderful Claudia.
The cost of living has really gone up a lot in the last few years, and it makes it really hard to keep on top of things and get ahead. My name's Claudia and I live in Melbourne with my son Seb. We're both really passionate about fitness. In a couple of months, my eldest son, Julian, and his partner, they're getting married and they decided to travel overseas for that, so we're all heading off to Santorini. I'm really excited to meet Kochie today because saving for my son's wedding in Santorini is a high priority for me at the moment, so every little bit helps.
Well, Claudia, thank you for having us.
Thank you for having me.
You've got a busy time coming up with a wedding in Europe, back for the first time in 35 years. Are you excited?
I'm nervous, excited, all of those feels.
Well, let's see if we can help give you a bit of spending money by reducing some of your bills and focus on you. I reckon that's the most important thing. You seem to focus on everybody else, your two sons and your job, solo mum. So I think you need a bit of financial love.
I'd like that, if you can.
All right, well, let's see what we can do. So, Claudia, the team at Compare the Market have been through all your bills.
Yes.
Now, these are just thought starters, so for you to think about, because everyone's very different, so we can point you in the right direction.
Okay. So I've been living here for 16 years now and I'd like a little bit more help getting my home loan on track so I can do other things.
First of all, your home loan.
Yes.
Gee, you've worked hard to pay it down, haven't you? It's almost paid off, which is fabulous.
We're getting there. We're getting there.
You're on a pretty good rate, actually. You're under 6%, which is a really good rate. So you've really focused on that by the sound of it in the past.
Yes.
But the brokers at Compare the Market have found an option that could cut your rate by 0.4%.
Wow.
That's like almost 1.5 Reserve Bank interest rate cuts, isn't it?
Totally.
Without waiting for them to do anything. So there will be fees attached to the refinancing of any sort of home loan. So you need to weigh up the fees against the reductions. 0.4% could reduce your repayments by about $23 a fortnight, almost $600 over 12 months. And that's still with your redraw account.
And that all makes a difference. That all helps.
Sure, it sure does. So could always double down, put that extra cash into an offset facility or pay off the principal and clear the debt a whole lot faster.
Okay. The main bill I'd like help with would probably be the home and contents insurance. I always find that's a tricky one to get down in price.
Home and contents insurance.
Okay.
Oh, you say okay with a bit of a tone in your voice.
Because every time you get the bill, you go, it's gone up.
So it is a big sting, and you've really felt it.
Yeah, that's right, I do.
Okay, so one easy trick in bringing household and contents insurance premiums down is often to pay annually rather than monthly. Yeah. But that's dependent on your cash flow. Yeah. And that's a real individual decision you have to make. The Compare the Market team have found a policy that could reduce your premium by more than $630 a year. $630.
Okay.
That's paying annually.
Yes.
If you pay monthly, it's more like $360 less.
That's still a lot of money.
Still good. So work out your cash flow on that.
I like the 600 though.
And that's also with your $1,000 excess. Now, if you thought about increasing that excess to $1,500 and still keep paying annually, the reduction in premium would go from $630 to $770 just by adding a bit to your excess, remembering that if you make a claim you got to pay the first $1,500 rather than $1,000.
Okay.
And of course, the big tip with home and contents insurance policies is look at your inclusions. Make sure to regularly do a bit of an audit of your contents, how much it's worth and whether you've got the right level of coverage for it. All right, Claudia, that's a good start, I reckon.
Yeah.
Almost $1,400 in reductions from your big bills. That'll go away towards the wedding.
Definitely.
Trip to Europe.
Yes, yes.
So I reckon a good start, but more to come.
Okay, I'm excited.
After the break, how to supersize interest rate cuts. Top tips for homeowners, buyers and renters. Welcome back to Your Money and Your Life. Well, mortgage holders are breathing a collective sigh of relief with the Reserve Bank cutting interest rates yet again this year and more to come, and lenders passing them on in full. Lower rates mean smaller minimum monthly repayments for borrowers, but it doesn't mean you should rest on your laurels. There are more savings to be had if you remain proactive in the year of rate cuts. Financial advisor Ben Nash joins us from Pivot Wealth. Ben, good to see you. What should mortgage holders be doing now to get even more savings than the rate cut?
Well, I think making sure that you've got a good quality mortgage product that's competitively priced so that you're not paying any more than you need to on your interest rate is really important. Mortgages and mortgage repayments are one of the household's biggest expenses.
Yeah. So shop around, see if you can get a better deal.
Absolutely, make sure that you're shopping around. Also, the structuring of your debt, looking at your principal and interest only, and just making sure that you've got a clear strategy that is optimal.
So, rate cuts coming. Everyone goes, yippee, my repayments will reduce. I'll have more cash to spend.
Yes.
But what are the advantages of keeping your rate higher, not taking those cuts?
Keeping your repayments the same will generally shave years off your mortgage. I was just looking at some numbers for a $1 million mortgage. You're saving around $150 a month based on 125 basis points cut. But keeping the repayments at that higher level, it cuts about 4 years off your mortgage term. And so with forecasts, if you're talking about a few cuts together, you're talking about a number of years shorter, potentially a decade or more even, bringing your mortgage down. So it's funny.
Yeah, that's a lot of interest that you're saving.
Hundreds of thousands of dollars in interest costs, but importantly that you want to be putting it to work. It's not to say that it needs to go into your mortgage. If you've got some investing that's going to be more impactful for you, then sure, but making sure that you're actually picking up the profit that you're getting from the rate cuts is the big thing. Absolutely.
Okay. What if you're on a fixed rate, fixed term loan at a higher rate, interest rates coming down, Reserve Bank saying more to come? Should you be renegotiating?
Well, you can talk to your banks, and typically when you're on a fixed rate, you do have the ability to exit it early, but it will generally come along with what's called a break fee. If you're on a variable rate, it's a completely different story. So if you do a bit of deal shopping around online and you can find a rate on a similar product, principal and interest, or owner-occupier type loan, call your bank, negotiate with them, and you can often get them to come to the table and reduce your rate without you having to go through all of the admin of actually refinancing your mortgage.
All right. Good tips for homeowners. What about renters? Is it a market where you could renegotiate your rent down? And what would be a good argument to a landlord?
Housing is one of our biggest costs, and so even a small saving each week can make a really big difference to your situation. Comparing the rental market for other similar properties to make sure that you're not paying overs for the place that you're in, having that conversation with your landlord or your property manager and seeing if they'll come to the table. If they won't, and you can see that you could get a cheaper property that's quite similar to what you've got, well, you've always got the power to up and leave, and then you can lock in the savings that way.
Ben, great advice. Good to see you, mate. Thank you.
No worries.
Deciding on how your super is invested is one of the most important financial choices you'll make. Why? because different investment options come with different levels of risk and potential returns, and the right fit depends on how comfortable you are with the market ups and downs. If you're after more stability, lower risk options might be your style. They typically have fewer short-term fluctuations, but may deliver lower long-term returns. On the flip side, higher risk options can offer better long-term growth, but come with more short-term volatility. So you'll need to be okay with some bumps along the way. The key is making sure your investment strategy matches your goals, your comfort level, and your life stage. Most super funds offer a range of options, from the low-cost, no-fuss, buy super default, to conservative, balanced index and growth options. And you can choose more than one. If you're not sure where to start, Brighter Super's Investment Risk Profiler makes it easy. It's quick, simple, and helps you work out your risk appetite. Because your super should work as hard as you do, so make sure it's invested for your future, and a brighter one at that. Coming up next, safe haven stocks to help you ride the ups and downs of the share market. Welcome back to Your Money and Your Life. Oh my goodness, it has been a bumpy ride on the stock market this year. From trade wars to the constant threat of recession, it's enough to cause any investor to break out in a cold sweat. Well, that's where safe haven stocks can assist. These are assets that have historically held or even gained value during downturns. Gold, one of the most popular. In fact, recent data shows more than 2/3 of Aussie investors plan to increase their precious metals allocation this year. Big jump from last year. So how can you use gold and other safe haven stocks to fortify your portfolio? Market analyst at Bell Direct, Grady Wolf, joins us now. Grady, good to see you again.
Good to see you, Kochie, as always.
All right, let's start with gold.
Yeah.
How can you get exposure to gold through the market?
There's a number of different ways. You can get physical gold, you can get ETFs, you can get miners or explorers if you have a bit of a riskier appetite, but you obviously have the safe haven nature of gold, or you can get producers. So what we're looking at the moment, the producers have been on a run. There's no denying that. Northern Star Resources, Evolution Mining. These companies have gone from strength to strength because they're selling unhedged onto the market. You don't want to see hedge books right now because we want to capitalize on the upside potential of the spot price. At the moment, not many investors are buying into the gold, physical gold side, because you need a pretty strong safe at home for that. But the ETFs like PM Gold, GOLD, NUG, those ones are going really well at the moment.
Okay, so the big miners
Yeah.
and also the ETFs.
Yeah, exactly.
Give you the exposure. Banks are always seen as a safe haven, are they?
Absolutely, and I think more so than ever right now. Investors have seen them as this guaranteed return, this guaranteed safe haven, and I think the valuations, everyone's had a CBA on a sell for how long now? Nearly 2 years.
Yeah.
They're trading on PEs that are astronomical, but investors see our banks in Australia are so heavily regulated, there's no chance they're going under. So they're simply a safe haven, safe returns, income, you got your dividends coming in, they're growing, so we know that they're a safe haven right now.
CBA, the biggest. Is that the number one target for investors?
It is. You can't go wrong with CBA. And Matt Common runs a very tight ship, a very good ship, and the company is simply the best in Australia.
Any other banks?
We're looking at NAB as well because of the business banking element. So business banking has gone obviously gangbusters recently with the upside potential, rate cut outlook. A lot of businesses are spending more now. They have more cash in the bank because we haven't seen the volatility we have for a long time. So they have a lot of cash in the bank ready to pounce on acquisition opportunities. So that's really boding well for a company like NAB with the business banking side. But Westpac and CBA have said in their most recent results they're going after the business banking arm of NAB. So that's going to be a tight competition for some time to come.
Okay, all right, so gold, banks.
Yeah.
What about other safe haven stocks that tend to do well when the market's volatile?
Funny you mention this. Companies like Aristocrat Leisure, defensive stock, safe haven nature. As long as casinos are doing well, Aristocrat is doing really well.
Yeah, they make poker machines, don't they?
Yeah, but they've
Physical
also,
and online.
Yeah, online. They also rent out the machines, so annual recurring revenue through that. They've got these new games they're launching onto the floors, which are performing extremely well. And they have the iLotto business, which is online gaming. So younger demographic, all of us have an iPhone, so we can all access these games.
All right.
So they go from strength to strength. Their profit in the most recent quarter was $1.6 billion US. So
wow.
Incredible numbers there. We also have, at the moment, Coles. Coles has gone from strength to strength. It's a hold rating at the moment because of valuation terms, but it's one that you can't go wrong with. It's a supermarket we all need to eat, and they got cleared recently of the ACCC concerns of price gouging. They're not, but it's just a stable growth. It's stable growth year on year, and you've got the outlook for strong returns and a dividend as well. So that's a good one.
A third safe haven stock?
The insurers right now. The insurers are paying premiums right now because their premiums have gone up. You and I, a lot of Australians have gone into health insurance recently. Medibank have just upped their prices. So, and we're not going to argue. It's a very sticky service. A lot of us don't have the time to go and switch, or we can compare the market like I did recently. But again, once you're in, you kind of don't have the time to switch and save. So a lot of us are time poor, so the insurers can charge whatever they want.
Right, so Medibank you picked there.
Medibank, QBE, IAG. Even last week, IAG said they've had 2,500 claims already from the flooding in New South Wales just recently, but they also rallied that day because that's lower than they were predicting for the April month over as a whole. So insurers are doing well at the moment.
All right, Grady, we'll love your work. Some great safe havens for us to take the stress out of the volatility in the market.
I know.
Good to see you.
Good to see you as well.
Still to come on Your Money and Your Life, we hit the streets for your best money-saving hacks. From the start of July this year, power prices surged across the country. New default prices from the National Energy Regulator saw bills rise by more than $200 a year for some households, adding strain to already stretched budgets. Well, I'm here to say you can fight back, and it starts with better understanding your energy bill. Energy bills can be confusing, daunting, multiple pages of numbers, charts and jargon, information that's supposed to help you. A recent survey from Energy Consumers Australia found only 1 in 5 Aussies fully understand what electricity plan they're on and how they're being billed. Alexandra Kelly is from the Financial Rights Legal Centre.
Energy is very much a set and forget for a lot of people.
Truth is, it's not impossible to take control of your energy bill, and you only need to keep an eye on a handful of things. If you have a concession card, check your provider is applying the discount. It can be worth hundreds. Next up, my favourite, the best offer box. By law, energy companies must tell you if they have a cheaper plan available to you. Average daily use. It's usually next to your energy use graph. This is a great way to know and monitor how much energy you're using compared to last year. Check if you're on a time of use tariff. If you're using your washing machine or heater at peak times, that could be driving up your bill. And lastly, billing period. Paying monthly can help manage your costs. All households will automatically get a $150 government rebate over this half year, which will help a lot. But you may be able to find even bigger savings switching to a cheaper plan. Compare the Market's comparison tools make searching for a cheaper deal easy.
Making a few simple behaviour changes and maybe turning those appliances on at off-peak times, that will make a huge difference.
So you can reach out to your energy provider to ask them to do an energy audit. Other government departments also put out programs to help you identify if you've got big use energy appliances.
So there you have it, understanding your energy bill so you don't have to pay more than you need. In this week's Word on the Street, we ask for your best money-saving hacks and how much it helps your daily spend.
Money-saving hacks is just get rid of your habits, man. It's habits.
If I just track it down in my phone what I spend each day, that helps. Meal prepping. I like to meal prep so I don't have to buy out food every day at lunch, especially living in the city, Barangaroo. Food isn't the cheapest.
A big one is to use the fuel finder, the best price fuel for the area that you're in.
I do the Flybuys fuel, of 4 cents off fuel.
Sticking to a budget each week and making sure that I put savings aside.
I actually have a budgeting book
that has slips in it. So I budget myself every fortnight and I put so much in each slip and we build it up over time.
I try to save like 40% of my monthly paycheck to put that towards savings. I'm still at home, so stay at home as long as possible so you save some money.
Live at home as long as you can.
Oh, I just love Happy Hour. That's the best for me.
I use the 7-Eleven lock-in app. I also have like a budget app that I use, so then I know like I can't go out of that.
No, I actually don't think saving money can help you. Actually, just make more money.
So if you go into Coles, believe it or not, you can get a voucher for a chuck if there's none there in the shelf at the time you go in. You heard it from the Irishman first.
Well, that's it for today. I hope you've enjoyed this episode of Your Money and Your Life. For all the latest money and investment news that you need to know, go to ymyl.com.au. And while you're there, subscribe to my free newsletter, which is emailed to your inbox every Friday. Thanks for joining us. Next week on Your Money and Your Life, big future investment themes and what shares to buy to take advantage. How to pay less interest over the life of your home loan. We hit the streets in the name of side hustles. Plus, can we do better for Claudia's Santorini budget? All will be revealed.